These 7 steps are all you need to get a complete mastery of this trading strategy. I just executed step 1 and step 2, of which step 1 requires us to define our trading range, that is from 8:30 to 11 New York Standard Time, and step 2 requires us to look for any swing low or swing high that is very close to the recent or the current price before 8:30 that we'll be expecting price to either trade below or trade above, after which we start looking for our trading setup. You can see right here, the swing low which we drew has been traded below. So now is the time for us to start looking for our trading setup. But I always start trading as from 9:30. So I'm going to forward price until when we have arrived at 9:30. And that is when I'm going to drop down now to the lower time frames before I start looking for my trading setup. Now on the 3-minute time frame, there are a couple of things which we are going to be looking out for. We are looking for, that is if we are looking for a bearish setup, we want to see at least 2 bullish candles before the bearish impulsive move, and that bearish impulsive move should be greater than 25 points. And also, after forming a fair value gap in that bearish impulsive move, we want to see that candle 2 and candle 3 of that bearish impulsive move should be bearish, and the opposite goes for a bullish setup. So looking at the current price right now, we can see we have at least 2 bullish candles before this good impulsive move, and if we forward price, we can see that the impulsive move, actually candle 2 and candle 3 of this fair value gap here are both bearish. The reason why this is not going to be a good setup for me is because candle 2 has a high which is higher than candle 1. For the optimum setup, I want candle 1 to form a high, candle 2 should form a lower high, and candle 3 should form another lower high. So the moment candle 2 actually forms a high, which you can see here, which is higher than the high of candle 1, that setup for me is invalid. And as you can see, maybe if we had taken this as a fair value gap, you see price actually reacted to the downside before maybe if it's going upwards. Okay, you can see as well here, we had some very good bullish candles, that is at least 2 bullish candles here that formed a nice impulsive move that took out this low, but there was no fair value gap formed because the candle that was supposed to be candle 3 actually went all the way up and never formed a fair value gap. There we go. You can see something very, very interesting. You can see, so we have at least 2 bullish candles. We have a very nice bearish impulsive move, which if we measure it, it is 30 points. So it's greater than 25 points. Then the last part of it is we want to see candle 3 of the fair value gap be bearish, right? And as you can see, what stopped us from getting this setup here did not form here. You can see candle 1 has formed a high, candle 2 has a high which is lower than the high of candle 1, and candle 3 has a high which is lower than the high of candle 2. So 3 consecutive lower highs. That is the optimum trading setup that we want to see. So now the next thing we do is to draw our fair value gap. After drawing the fair value gap, we now draw our fib from the high of candle 1 to the low of candle 3. The naming of these candles, that is candle 1, candle 2, and candle 3, is based on the fair value gap. So you can see the fair value gap is between the low of this candle and the high of this candle. That directly means that this is going to be candle 1, this is going to be candle 2, and this is going to be candle 3. In the case if we had 2 consecutive fair value gaps, let's say that is after this one, then this now would have automatically been candle 1, this would have been candle 2, then the next one would have been candle 3. I realized that a couple of people had some misunderstandings on the naming of the candle. So I want to believe now you know how we name the candles. With this optimum trading setup right now, the next thing I'm going to do, since we're on the 3-minute time frame, is to drop down to the 1-minute time frame, and I'll be looking for the first fair value gap on the 1-minute time frame that has been formed within this fair value gap, and that is where I'll be taking my entry, and my take profit is going to be based on this negative 0.5 level of the fib, and my stop loss will be based on the 1-minute zone. Okay, right now we are on the 1-minute time frame, and just like I said, we are looking for the first fair value gap that has been formed within this zone where we are going to be taking our trade. And as you can see, this right here is the first fair value gap that has been formed within this fair value gap. And also, as you can see, it's above the 50% of this range. And this is now where we are going to be taking our trade. So drawing out now the fair value gap on the 1 minute time frame that we are interested in, we can see now that everything has changed, right? Now this is going to be candle 1, now this is going to be candle 2, and this is going to be candle 3 of this 1 minute fair value gap, which was within the 3 minute fair value gap. And when I took this trade actually, and I posted it on my community post, which I would highly recommend each and every one of you to go and check out, because that is where I show all the trades that I take within the week. Many people are like, this did not follow the rules that I tell you, because we want to see at least 2 bullish candles before the impulsive move, right? But remember, the setup was not formed on the 1 minute time frame. The setup was formed on the 3 minute time frame. Then we dropped down to the 1 minute time frame to look for a fair value gap within the 3 minute time frame fair value gap, where we are going to get a better entry, a better stop loss, but the best take profit that is based on the 3 minute time frame. So with this, now it's time for us to place our trade. Okay, I've placed my trades, and as you can see, my entry for the sell is at the high of candle 3, that is the low of the fair value gap, right? And my stop loss is at the high as well of candle 1. That is where our stop loss is supposed to be. Then my take profit, as you can see, is at a negative 0.5 level of the range from the 3 minute time frame. Now let's see what price is gonna do. We got tagged into price right here. Let's go. That was really fast. You can see price took literally just 5 minutes after triggering us into the trade to get into our take profit. This is the optimum trading setup, and I would love each and every one of you to go do a back test, thorough back test, to verify this and how it actually happens or unfolds in the market, because this is something that I have back tested myself and I have a lot of confidence in, and I know that it actually works, and I have been showing you guys this every single week in the market, and also showing all the trades that I've been taking. And this was a trade that I also personally took within the week, which I'm going to show you guys the screenshot right now. Another thing is, if you have been struggling to learn the daily bias, which ICT showed in his trading strategy, and you couldn't just get it, or you couldn't understand it, just like I also did not understand it when I was studying, then check out this video right now on the screen, where I go in depth and broke down this strategy that does not require a daily bias. With that said, catch you guys in the next one.